Hello, everyone, and welcome back to the main stage. We're really excited to have a great panel coming up where we'll be exploring social media and financial services. We know it's an area where it can be a fantastic tool of engagement, or it can be a space where people get it so wrong. So we've got a fantastic panel with us today to kind of look at the how and the why, and talk us through their experiences. So if I can just kick off by asking my panel to introduce themselves, and we'll start with you, Leslie.
Great. Good morning. Happy to be here. I'm Leslie Olsen, the Chief Marketing Officer for Fundbox. I've spent the past 20-ish years in marketing roles at technology companies, most of which were fintech or financial services related. Here at Fundbox, we are a fintech company started in 2013. We focus on powering the small business economy with innovative credit and payment solutions. So we work with small businesses across the spectrum of industries and segments, giving them access to working capital and other tools that give them greater financial agility and true peace of mind. Like most people and companies, the past 6 months have been a roller coaster. I'm very proud to say that at Fundbox, we've been able to really focus on delivering what our customers need, even as those needs have changed. And more about on this panel, the way we leverage social media to engage with our customers has evolved significantly. So I'm excited to be here and talk about the important role that social media plays for us.
Thank you so much, Leslie. That was a great intro. And Sarika?
Hi, everybody. My name's Sarika, and very delighted to be here today with all of you. I joined Pinterest just about a year ago, and prior to that, I was at American Express for close to 12 years, where I held a variety of marketing roles. One of my most recent positions there was on the global social media and digital strategy team, where I was responsible for managing our global partnership with Pinterest. And really during that role, I became intrigued by the potential that Pinterest offered as a full funnel marketing solution, specifically to FinServ and FinTech advertisers. I was fascinated in particular by two things. Number one, that people and consumers actually come to Pinterest with the intent to buy, which is very different than many of the other platforms, which I thought was very interesting. And then on top of that, branded pins are actually considered content, not ads by users. And that combination of intent to buy and ads as content really just seemed magical to me as a marketer. And as the head of vertical strategy and marketing for the financial services sector at Pinterest, it's actually my full-time job to talk with advertisers, agencies, industry colleagues like yourselves about what I believe is the unique value that Pinterest offers to marketers.
That's a really great introduction, because I think for a lot of people, they wouldn't necessarily make that association between Pinterest and financial services. Yeah, and maybe we can pass that. I would definitely go into that in a little bit more detail. But for now, we'll pass over to Devin.
Sure, absolutely. Thanks, Lisa, and thanks everyone for joining. It's great to be here. Devin Banerjee. I'm a senior member of what's called the editorial team at LinkedIn. We're about 75 journalists around the world curating news and views for different segments or industries and geographies around the world. And so I lead our financial services efforts. And really, I and my team have several roles, but the one most pertinent to this conversation today is helping thought leaders and subject matter experts in finance and fintech utilize LinkedIn as a publishing platform to distribute that thought leadership, to share their takes on industry trends, to discuss topics in the news. And I've now been at LinkedIn about 2.5 years, and it's been a really exciting time of growth in terms of content and publishing on the platform. But the past 5 to 6 months in particular have just been fascinating. We've seen about a 60% increase in content creation year over year during the past few months. LinkedIn overall has seen record levels of engagement. We've hit several new record highs in weekly and daily engagement over this pandemic period. And really, we see it as a validation that people, and especially leaders in finance and fintech want to speak out about different issues. They want to give and get help during a period like this, and utilizing platforms like LinkedIn and others, of course, to share that thought leadership, to discuss those trends, to engage in conversation around the news has just been more important than ever.
Yeah, that's great, Devin. And as someone who shares content regularly on LinkedIn, that certainly resonates with me. Denyette, can we ask you to introduce yourself now, please?
Sure, thanks, Lisa. I'm Denyette DePierro. I'm Vice President and Senior Counsel at the American Bankers Association for Cybersecurity and Digital Risk. I actually started our social media and the banking regulation of social media portfolio around 2008, primarily because we were seeing then that there was this new kind of platform, this new kind of potential advertising channel, and banks were very hesitant about how to engage with it because we had rules that were set for old media, basically print, radio, and TV, and trying to apply those old rules to new media was incredibly difficult. So there's a lot of kind of reasonable judgment. There's a lot of thoughts around, trying to make some equivalencies between what we know we can do and where we think we can go on social channels. And even looking forward, how do we start doing banking on gaming universes or virtual realities? So trying to actually start looking at social as kind of a bit of a testing ground, and to start thinking about how can banks communicate on these new channels going forward, because we know new channels are going to come to the forefront.
That's a really interesting introduction. And yeah, I hadn't thought about that as kind of a signpost towards how it might evolve in the future. I wonder, Leslie, if we could start off with you and giving us the perspective of a provider of financial services, how you see leveraging social media as part of your broader strategy, and what are some of the outcomes you're looking to drive?
Yeah, I'd be happy to share. At Fundbox, social media is a really important part of all of our marketing activity and really underpins a lot of the strategies that we're going for. In particular, it's a key pillar for how we build our brand and reinforce trust and reliability. And nothing is more important for a financial services company than really establishing a trusted relationship. We also use social media to really engage and connect with customers on a more personal level in order to really deepen that relationship. And it allows us to provide the highest level of service to our customers. And using social media as a service channel is relatively new to us, but something that we have found to be very effective. And as I think about how social media has evolved for us over the past 6 months, it's been fairly dramatic. And I think that is one of the advantages of social media, is it possibly more than any other channel, you can adjust and flex and pivot in real time. And so kind of, if I think about the chronology of the year, here we are in January, February, things are just trucking along, things look great. We're in the normal. And at that point, social media for us was mainly focused on brand building and customer acquisition and engagement and connection with existing customers. And then boom, March hits. And for us, it was actually March 16th, our world really changed. And our customers, which are small businesses, were hit really hard, really fast by the shutdowns. And I'm sure you can imagine the level of panic and anxiety that they had about how are they going to get through this. And so, when Devin was mentioning the need for content and information, we really shifted all of our social efforts at that point to providing information and resources on how to survive. And we saw an incredible appetite for information and resources at the state, federal, and local level. And so we just kept focusing on that. At the same time, we use social to be advocates for small businesses, because we know that our small business customers typically wait a long time to get paid. And so we actually created a campaign on social media focused on getting paid faster. And so we were able to really create a platform and give small businesses a voice through social media. So that was really exciting. Moving into May and June, we shifted into the Paycheck Protection Program, which I'm sure most of you know, kept many businesses afloat, and we were a direct lender during that process. which was amazing, but we had to provide a ton of information around that, as well as this is really where our support channel kicked in, because we had tens of thousands of businesses wanting to know the status of their application, and the normal channels picking up the phone were overwhelmed. So suddenly we shifted most of our efforts to our online social media channels, and it was very effective. So we have evolved, our social media plans have evolved, and it's been really effective in allowing us to flex with the needs of our customers.
That was really interesting. And I like that way that you outlined the shift from communication, but also including advocacy on behalf of the people that you serve. And turning to you, Sarika, I imagine some of what Leslie outlined really resonated with you, and maybe you could speak to the ways in which that you see providers, financial services providers, leveraging a platform like Pinterest.
Yeah, I'd be happy to add to that. And I think what I'm going to share is similar in respect to what Leslie was saying. So at Pinterest, we have been gaining a tremendous amount of traction within the financial services industry over the past several years. And at the beginning of COVID, we actually saw some of our advertisers pause to rethink their strategies and just make sure that they were relevant, adding value, advocacy, just making sure they had the right message in the market. But we're seeing that they're back on our platform now in full force, and in fact, engaging more than ever before, which has actually been very thrilling to see. And the primary reasons behind this increased momentum, I think, can be summarized in 3 simple words. And those are target, trigger, and trust. And to me, Pinterest is unlike any other platform out there for FinServ marketers because it has your target audience in a trusted environment, which Leslie alluded to, the importance of, and during trigger moments when frankly, financial services messaging matters more than ever. So I can just quickly dig into this to provide a touch more context on each of these words or these pillars. So by target, what I really mean to say is that we've got their target audience. We're now the 3rd largest platform in the country, only behind Google and Facebook properties. And so we have scale, and that's surprising to some people who don't kind of realize how quickly we've grown. We're at 416 million monthly active users, which means that if we were our own country, we'd be the 3rd largest country, only behind China and India. We're getting big. And so what I think is cool is that we not only have scale and the target audience that marketers are looking for, but we have them in an open mindset to brands. Similar to what I mentioned before, they're on our platform with intent to buy. And so they're really open and receptive to brand messaging. When I talk about trigger, this is me sort of drawing back on my days on the client side as a marketer. When I was at American Express, our internal research proved to us that trigger moments are life moments like getting a job, getting engaged, having a baby, buying a home. These were moments when people naturally reconsidered their financial services and insurance products. And given Pinterest is the go-to platform for people as they plan towards those very life moments, we become a very natural and obvious fit for financial services marketers when they're looking to optimize their budgets and reach customers precisely when their message matters most. And what I think is really interesting at this particular moment is some of the research I've been reading is suggesting that COVID in and of itself is a trigger moment that every consumer across the planet is actually experiencing at the same moment. And if that's the case, then it's a particularly unique moment for all FinServ advertisers to be on our platform, because everyone's going through this sort of tumultuous time where they might be open to thinking about solutions to help them save money or to better plan for the future. And then last but not least, as Leslie mentioned, trust. It's vital for all marketers. But I want to be bold and say it might be the most important for financial services marketers. Ever since the 2008 financial crisis, the financial services industry has had a serious trust issue. In fact, the Edelman Trust Barometer, which is the world's largest aggregator of trust-based research, ranks the financial services industry as the least trusted industry on the planet. And I'm proud to say that Business Insider ranked Pinterest. Devin, you'll be happy to to share in this is rank Pinterest and LinkedIn as two of the most trustworthy social platforms. And then additionally, Pinners rank us the #1 most trusted platform across categories of reputation, content standards, brand safety, and transparency. And to me, what's even more powerful for advertisers is that Pinners rank us the #1 most trusted platform for FinServe content specifically. So net, we're seeing a lot of FinServe and FinTech advertisers leveraging Pinterest now as a must-buy solution. And it's really about reaching, again, their target audience during trigger moments, while concurrently being able to build a long-term relationship with their customers in a trusted environment.
Thanks, Sarika. That was really interesting. And I think actually, there'll be a lot of people listening now who probably didn't know that about Pinterest. But actually, turning now to Devin, and obviously you mentioned, the tremendous growth in content shared across the platform. And I imagine, what Leslie and Sarika said about the last 6 months and, the absolute need for companies to be able to reach their customers when you can't do it face-to-face and their broader audience. Can you share a little bit more about what you said, the ways in which financial services firms are leveraging the platform, and tell us maybe a little bit about best practice when it comes to driving engagement?
So absolutely, as both Leslie and Sarika mentioned, I think at the beginning of this period, there was at least a pause or a rethinking of what the approach should be towards social media. And we saw that reflected as well. And really that started an interesting kind of arc or evolution of how we saw financial services and fintech providers approaching content on LinkedIn. So I would say around March, there was a lot of focus around the disruption that was occurring and what opportunities could come out of it. So for more traditional institutions like investment managers, that was, of course, content around the markets and the actions of the Federal Reserve and what that meant, for their institutions and for their clients. For fintech providers, especially those serving small businesses, as Leslie said, that we started to see a lot of kind of service-oriented content around, what steps, customers need to be taking, small businesses need to be taking right now to shore up financing, shore up funding, et cetera. We also saw going into April as all of these big institutions, which, if you think about it, are employers of a lot of people, started shifting their nature of work to working from home, to being virtual, to being remote. We saw a real rise in more kind of leadership or management content, if you will, around how to do that well, or anecdotes about how big institutions, think the big banks, for example, a lot of them started having their CHROs or other members of the C-suite or other members of the talent organization talking about that shift. Interestingly, then in June, as societally, all of us were reckoning with, racial justice, and to be more specific, racial injustice. We actually saw financial services players really step out, and many of them taking a bold stance from the C-suite level to publish around what that meant for them and their organizations. Again, just that recognition that these companies are large employers of people. I mean, for some of the big banks, tens of thousands, even hundreds of thousands of people. And so that was quite interesting as well. And now we're seeing, again, a return of a lot of that service-oriented content, as Leslie mentioned, especially as some of the federal aid and the fiscal aid and spending has lapsed, the PPP program, for example, and unemployment aid and assistance. We're seeing some of those financial services providers step up that more service-oriented content. And really across all of these things, and both Sarika and Leslie mentioned some of this, like trust, really for us, in terms of the actual quality and substance of content, authenticity is paramount. I have these ABCs that I've started using. And number one is authenticity. You want that voice to be differentiated from the corporate speak, from the press releases, from the product announcements, even from more overt marketing. You want it to be, you want it to resonate more with that end customer or that target audience. The B, which is a little bit forced, but it's bringing something to the table. It's advancing the conversation in some way. This is especially important around thought leadership campaigns or thought leadership pieces. You don't want, your executive or your subject matter expert to just be repeating what's been out there or what's been said around that topic. And then C, which is really important for building both trust and a following on social platforms in particular, is consistency. You know, you want people who come across your content to opt in to follow you, for example, on a social platform, or to follow your brand or company. And you want them to do that because they know they can expect similar content on a consistent basis going forward. And I would just mention that consistency does not have to mean frequency. They can mean different things. It doesn't have to be daily content or weekly content, but just some kind of consistent basis and cadence is really important to building a following on a social platform.
That was really interesting, Devin, and I definitely want to pick up on the issue of authenticity with all of you in a sec. But before we continue our discussion of the great ways that companies can leverage social media platforms, I think it would be nice to have a word from Denyette about some of the potential pitfalls, because obviously we're dealing with heavily regulated institutions, and clearly some have suffered both from that lack of authenticity, but also almost from a kind of fear of leveraging those platforms. So if you could share a little bit of your view on that, Denyette.
Sure. What we tend to see with a lot of the institutions that are trying to get on social media and not very comfortable, and they're kind of like the awkward kid in the room, not quite sure what to talk about, is I always tend to start with a couple things, which is first as a person. So if you're a chief marketing officer at an institution, you can be at a community bank, a very large institution. If you yourself are not on social channels, understanding how they work, how the conversations flow, then you're not going to do this well from a corporate perspective. So first, those individuals get online, join a bunch of channels. As soon as this new social channel is introduced, I usually jump on and make an account just so I can understand how it looks and start analyzing it even from a legal perspective, and just to see what banks are there and how they're communicating. And I usually tell even the banks that, what are your peers doing? How do they communicate? What are they talking about? And then I also follow up with and realize the least interesting thing about you as a company is your products and services. Because the story that a lot of banks aren't telling that they should be telling is, and especially again, the community mid-sized banks do this really well, is telling about the fact that you sponsor the fireworks at the local county fair. Tell me about the education and outreach you do to your local elementary schools, or that you sponsor the local baseball team and you have them come to your local branch when they won a local championship. Those are the stories people are interested. And that's how you build that sense of community, which is also really good is when you're telling those stories and having those conversations, there's a very low compliance risk there because you're not talking about products and services. The moment you start talking about products and services, you're going to have a whole different kind of compliance threshold that has to be met. So then I'm also telling them, get comfortable with those conversations. And then once you start realizing, how you create content, how your customers want to engage, even your own internal approval processes around, does legal okay with this? Does compliant and risk sign off on it? Does our, president of the bank, does the board of directors want to understand what our strategy is? Get comfortable with those processes. And then you can start talking about, okay, let's once a quarter start working on talking about a product. Just kind of, and take baby steps. There's nothing that says that you have to jump on to a channel on day one and start talking about loans and investments and trying to figure out how to separate what's FDIC insured and segregate it from what's not FDIC insured, and how you do that on a single, social, because that's the thing, as a customer, I'm seeing all of this on a single page, and how do we apply those old rules to new media is really tough. So having to think about those things. So get comfortable with the channel, have interesting conversations with your communities, and then we can start talking about where the regulation comes in. And then when we are ready to talk about regulation, what products do you want to talk about? And have this part of your strategy. Are you only going to be talking about FDIC insured products? Are you using this for business development? Is your mortgage staff going to have their own channels and allowed to interact with their customers on social channels? Some banks do it that way. Is everybody in the bank allowed to post? Are only certain people allowed to post? Do you have an official voice? And there's no wrong answer. There's nothing in the regulations that says everyone at your bank can't post. That's really, again, about how you want to manage. There, again, maybe different compliance thresholds you need to meet in terms of training and oversight, but no one says you can't do it that way. So banks are starting to understand this. Some of them are doing it differently than others. Some of them are doing, I would say, better than others. But what I've really seen is this trend is the banks themselves realizing that the least interesting thing about them as a company is their products and services. And they really are using social channels to talk about and engage with their community. And then they can say, hey, if you want to talk about a loan, you take that offline, you take that into a traditional conversation or traditional channel that you can control. So we are definitely seeing that the banks are aware of these thresholds. We're not seeing this big push around products and services. We are seeing an adherence to, I would say, the usual channels. So it's, it's going to be LinkedIn, it's going to be Facebook, sometimes Pinterest, but we're not seeing them, kind of jump onto a lot of the new channels because they have a very specific audience and kind of a very specific way that they want to engage. But they're doing it, and they're doing it, pretty well. But it took them a long time to get there. And I would say, we're always going to see them observe what's happening in any of these new channels first, and then try to figure out how they're going to engage with it. The regulators have said, we had guidance that came out in 2013 around social media risk management. It has not been updated since then. And for the most part, the idea is use reasonable judgment, understand what you have to do, and then based on that reasonable judgment, how do you extend that to a new channel? Because what we're not going to see is a new regulation come out every time that there's some kind of new social channel, some kind of a new way to communicate, and really saying these are the risks, and then the bank having to understand how does that risk show up on this channel, and then how do you mitigate and control that risk? And the regulator's not always going to tell them. There's not going to be a checklist going forward because too much is happening in a dynamic fashion for there to always be a rule to follow. So we're having to get away from the checklist and really trying to change culturally to identifying the risk for ourselves, understanding what is the risk appetite of those companies to engage, and then developing a strategy that responds to those risks. So it's a really different, it's different than where we were 10 years ago, especially pre-crisis, with a lot of checklists and a lot of prescriptive regulations.
That's really interesting. And I like that framework of starting safe, build your confidence, build your community, and then get a little bit bolder. I'm just going to pause there for 1 sec to say if anyone does have any questions, and I think there probably will be quite a few questions because we have financial services institutions and fintechs of all shapes and sizes in the audience today. Please post them in the chat, and I'm sure the speakers will do their best to respond to them. So picking up on something that all of you touched on, which is around authenticity and kind of building that voice and community. Maybe we can pass to you, Leslie, to talk a little bit about how you do that as an organization. How do you ensure, especially if different people are posting across different parts of the organization, that you have this collective, authentic voice, whether you're speaking to issues of social justice or other community matters?
So on the topic of authenticity, this is something that we think about a lot. We do have certain controls within the company in terms of who is posting on behalf of the company. So there's not everyone in the company that's out there speaking on our behalf. We want to be sure that we are giving a consistent message and that we are aligning with the values of the company, most particularly, which I think we do very well. We certainly attempt to have a common message and common voice across our marketing channels. I actually think that's fairly standard marketing practice. But there is a different flavor on social. It's a very personal, interactive, engaging environment. So you certainly have to be flexible. So keeping the core values in mind is really important. I think the biggest thing is doing what you say you're going to do. So it really goes back to the trust thing. And especially online, people pick up really quickly on things that you're doing versus things that you're saying. And so it's really important that your actions meet your words. And so we are really, really conscious of that. And so whether we're talking about social issues or what's happening in industry or whatever topic it is, we're very careful that what we say is something that we can demonstrate in how we're acting. The other way that we kind of reinforce authenticity is letting our customers speak for us. So we do a lot to elevate what our customers saying about us. So we have customer videos, we'll highlight certain reviews. So nothing is stronger than having your customer essentially represent your values for you. And we have some great customers, and they're very well spoken, and they've done great things. So for us, the two go hand in hand.
Great, and I imagine you have something to say to that, Sarika, and then perhaps you, Devin.
Yeah, I'd love to chime in here. Agree to everything, Leslie, you said. I've thought a lot about why and how Pinterest has made themselves a trusted platform, and then what we can learn from that and share with our advertisers. And for me, it comes down to three things: intentionality, positivity, and true value exchange. So when I talk about intentionality, I have a quote here actually from our CEO and co-founder that just resonates deeply with me, and I think will likely resonate with a lot of advertisers listening today. But he says, if you want positive things to come out of internet technology, then they have to be deliberately engineered that way. So part of what I think is really interesting about that statement is Pinterest didn't just like wake up and become trustworthy. And Devin, I'm confident it's the same thing for LinkedIn. You just didn't wake up and everyone thought you were trusted. It actually was because our founders considered that a value and built our platforms with tremendous intentionality around how can people trust the content that they're receiving on this platform. So I think intentionality is tremendously important. When I say positivity, it's a complex world out there, and I can say at Pinterest, we're working just very hard to keep the platform very positive and supportive of what people need, to bring people together, to inspire people. That's actually our mission. Our greatest goal for the company is to become the world's inspiration company. So it's really about keeping a positive, hopeful environment. And then the last is that value exchange. And this is about being authentic and thinking about what consumers actually need. And so we feel that way as a platform, and we really encourage our advertisers to take that on as well. So it's not just, I loved Denyette what you said about, people care less about our products and services. It's like, we encourage our advertisers and even ourselves to only talk about those things when it matters. So that's why, like, if someone's having a baby or getting a new home, that's a great time to talk about insurance, or it's a great time to talk about a mortgage, but it's in service to what their needs are in that moment. So again, for us, it's I think a lot of how we've established trust, again, is intentionality, positivity, and making sure we're providing true value exchange for customers.
And Devin, I imagine you have some thoughts on that, because I think you're right in kind of, when looking at the Black Lives Matter movement, for example, and other social justice movements, there are just some companies whose claims rang hollow, for example, and they, as you said, Sarika, and you, Leslie, they were exposed quickly because it wasn't followed throughout, through the company. So maybe you can speak a little bit to that idea of authenticity and that authentic voice.
Yeah, absolutely. I mean, I think there's a long-term trend or tailwind, and it's related to that trend of stakeholder capitalism, if you think about it, where companies and leaders are realizing that they have more constituents to speak to. And actually, I think what that's allowing is a comfort or a confidence in themselves and their teams to speak out on those issues. When maybe in the past they thought, my investors don't care about what I think about this societal issue, and their investors were, the only stakeholder they cared about. Now they're thinking about the communities in which they operate, their employees. As I said, these are many of these big institutions are huge employers, and I think that's instilled confidence in them to speak out about these things. Another thing I'm often telling executives and their teams as well is, a lot of the things I talk about sound at first instance like a lot of work, and their teams, their chiefs of staff or their communication and marketing teams are thinking, wow, a thought leadership campaign or crafting something on a societal, cause or movement is just going to take a lot of work. And really what we found to be successful on LinkedIn is even short pieces of content, or what I call peek behind the curtain type content, where you're just seeing how an executive or a leader in your company interacts with others, in his or her day. Even if that's a photo of them meeting with an employee or meeting with employees or meeting with a peer or a big customer or something like that. And we've seen several great examples of this. Tashunda Brown Duckett, who's the CEO of Chase Consumer Banking, really does a great job on LinkedIn of tying in the causes she cares about personally with her business and her day-to-day work. So she's often, visiting communities, visiting customers, and she and her team are just sharing photos or sharing short clips of what she talks about with those folks. So there's all this content that's already being created. If you think about it, it may be talks that your leaders are giving, or events they're at, or conferences they're at. And that content can be repurposed quite easily or cross-published on different platforms, or even, as I said, just a photo and a kind of peek behind the curtain that really kind of showcases authenticity and allows, you know, the audience or the public to see what a leader kind of truly cares about in his or her day or his or her week.
I really like the way that you outline the way that different types of content can really help drive that idea of authenticity, and also kind of giving you a peek behind the curtains. We only have, sorry. Go ahead.
No, that's okay. I was just going to say, I think another thing about authenticity as well is we don't always have to get things right. I think sometimes we can collectively make mistakes. And I think it's about how in today's world we can own that, or learn from it, or learn from each other. And so I think that's also just like a big part about this too. It's like we should have that intentionality, we should have that positivity, we should aim for value exchange. And in moments where we don't meet that we think hard, look within ourselves, look within our peer set to think about what we can learn from and how we can continue to get better.
I've certainly noticed financial services leaders looking to what their peers have done and whether they've stepped up and addressed an issue, and then that has instilled confidence in them. So they say, oh, wow, you know, Larry Fink, I'm kind of surprised he stepped up and spoke about that, but I have views about this, and it, you know, clearly he sees it as important, and BlackRock is okay with it. Compliance is all good with it, and so then you see other leaders step up. So really elevating role models who are doing this well is something that I and my team spend a lot of time doing, because it just instills that confidence in other leaders in the space.
Yeah, it clearly has that positive network effect where other people feel they can open up about their values. And I wanted to we only have a couple minutes left, and I wanted to pick up on something Denyette said, where she said every new platform that opens, that launches, she signs up to learn all about it. And my question to all of you is, do financial services firms even have a choice when it comes to using social media? Because that's where people are spending increasing amounts of their time. So we just have some final words from each of you on that, and perhaps we can start with you, Denyette.
Yeah, I will say that in context, yes, I said it for just about everything. The downside of that is if you actually go to the website, Have I Been Pwned, which is basically a repository of data breaches, because of how much social media I'm engaged with, I have been breached, my credentials been breached like 12 times. So I don't recommend it unless I'm actually also very vigilant about what kind of passwords and things I use. But because of that, I would also note that in the 2013 guidance, it does actually say that banks can use whatever platform they choose to, but it is very focused on reputation risk. And one of the questions that continuously comes up is, especially as we look at what's perhaps happened with Facebook, with the Analytica kind of, even congressional testimonies and some of the scrutiny around some of their practices, what we're seeing with privacy and the use of data. I would say even right now, where we have an executive order out that's scrutinizing TikTok and concerns about its ongoing cybersecurity, that we have not seen anything from a regulatory perspective that says this is beyond the reputation risk that we want to see banks engaged with. But if you start looking at some of those channels, where is that threshold? I would say when you have an executive order, that might be getting close to that threshold, but we haven't seen that yet. And we do have to be cognizant about what channels you're on. How does that channel's reputation then potentially actually impact your institution's reputation, even if that channel is somewhere where your customers are going? So yes, we want to be able to follow our customers, but we may not technically be able to follow them everywhere they go.
I think that's an important note of caution. And over to you, Leslie.
Yeah, I guess I think about it slightly differently from a marketer's perspective. So when I think about it in the context of offense and defense. You choose specific channels where you want to make investments, where you want to really focus on proactively building your brand, acquiring customers, engaging with customers. And that's where you can proactively give your message and present yourself. You have a slightly more control over how you're presented. The flip side of that is defense. And it's very important to play defense on social channels. And this is where you have a little less control over where and how and when you respond, but it's very important to be out there. I think to Denyette's point, there is a brand reputation, essentially brand reputation exercise that has to happen so that you know where things are happening and you're monitoring and you're ready to respond. And 9 times out of 10, you can handle anything that comes to you unexpectedly if you have a playbook, if you have processes in place. So, but it is a balance between offense and defense.
And I would just add to that, it also helps if the institution is very aware of their funding and resources. So don't overextend yourself to more channels than you can actively monitor and manage for all of those reasons.
Yeah, no, that's a good point. And maybe we could just finish up with some views from you, Sarika, and then you, Devin.
Yeah, I mean, I would just say we are seeing record levels of engagement on our platform, and I don't think that's unique to our platform. I think there are a lot of people in the environment we're in today that are just engaging online a lot more and digitally and socially than they ever have before. And so I think there's a great opportunity for advertisers to engage in the right platforms. And the highest order that I would say is just make sure it's authentic and make sure there's real value exchange. And I think if you hit the mark on those and your intentionality and your heart and your goals are in the right place, there's a lot of value that you can provide to people in a time when people are really looking for help and assistance in making the right decisions for their families and for themselves in this industry.
Great.
And Devin, we'll finish with a word from you.
Yeah, sure. I would just encourage people to try to be creative and to try to experiment. And a lot of people look for what has already been done in this fashion or on this platform. And there have been so many times when companies have come to us and said, we're thinking about trying this. What have you seen done before? And we say, we've actually never seen this done before. We don't have a playbook for it. So you're the first to try it out. I mean, Ray Dalio wanted to do Ask Me Anything, AMAs on LinkedIn. We didn't really have a playbook for that. He and his team started experimenting, and now we've created a playbook around what he's done because it's been so successful. So their creativity helped push our editorial team at LinkedIn forward. Dan Schulman, the CEO of PayPal, wanted to do a peer-to-peer conversational exchange series on LinkedIn. We didn't really have a playbook for that. No one had really done it well, but he and his team were creative enough to try it out, to iterate, and now we've kind of built a playbook around what he's done. So, you know, it's not like the platforms have all the answers, and it's not like everything has already been done before. You know, you and your teams can kind of act like journalists and have fun that way and kind of push the envelope yourself.
Great. I think that's a great note to finish on. So creativity with a little bit of caution, I think, as Denyette would say. Thanks to all of you. It's been a great panel discussion. I wish we had more time, but hopefully we can revisit this topic because I think it's really interesting. And for those of you watching, please stick with us on the main stage. We have a great panel discussion coming up focusing on the digital future of wealth management. So thanks again to the panel.